What's up, guys? It's November 1st, right? It's November 1st, 2024. 2 months left in the year. Hope you guys are doing good. Hope you guys have had a good year. Hope you guys have learned a lot. I said this at the end of my last video, but I'm gonna throw this in the beginning to make sure you guys hear it. There is a YouTube channel taking my videos, squishing them together and posting them. This is my only channel. I've reported it. They've been taken down. If you guys come across any other channels that are doing that, or that dude's same channel, because his channel's still up, but my videos got taken down, just shoot me a message on Discord, please. I'd really appreciate it. But anyways, yeah, we had a good day in the markets. Every day is a good day. Yesterday we had a huge sell, and yesterday was the first gap bar over 51 days. Remember, we did I missed the bar. Hold on. From here to here, 51 days of, we had a couple bars under, so okay, hold on, let me redo this from here. So we've had 48 days above the EMA. This is the first gap bar below the EMA, and actually we can add a gap here now. Bears finally got a new gap. That's crazy. That's pretty interesting to see that Bears got a gap below the EMA. Bulls rallied and then we sold off, so bad follow through for the Bears. Bears wanted today to be a bear bar for sure. That'd be better for them. Ended up being a bull bar. Could be a pullback from a leg one, pullback, like two, pullback, like three, some sort of wedge bottom. Or we start the rally. This is the first gap bar, and technically it's on the 5 minute, that would be a buy, right? We wait for a little bit of bullish price action and we buy. Our first test target would be here for the bulls, and then here, and then bulls want to break above. For the bears, well, they want a measured move of it. This sell off. What does that measured move even look like, actually? Top of the pullback. 5,700-ish. Kind of lines up. And if they get 1.5R, that's almost closing the gap. So both sides have good. Honestly, I don't even care if they sell off or if bulls rally, because we trade price action. Whatever happens, we trade it. But yeah, those are the options I'm seeing. We have a sell, so bulls target is going to be previous breakdown levels. They want to close the gap, and then the bears want a continuation. They want us to go into oblivion, just like that. Okay. You have a gap up. Wait. Yeah. Gap up with continuation, bar one. I wish there was a better way to do that. There kind of is, but I don't necessarily like it. Okay, like we could roll like that for a little bit. So we have a gap up, bar one, bull bar. It's continuation, great for the bulls. And then the first 6 bars are all bullish. Bar 7 is the first pullback, and you can see that gets bought. I bought this high. I wanted to buy low here, but I was on my phone, so I was trading at work today. So I was looking for a little more confirmation, because I wouldn't be able to hit out as fast if it sold off right away. I'd have to tab back and forth between the apps. So I bought here. I got out on bar 11 because the bars were shrinking and we're coming close to resistance. I'm seeing a leg one. See, that's what I don't like. I'm seeing a leg one, shallow pullback, leg two, second leg trap in a range, deep pullback, right? So now we have a trend line break from here. And this is its own leg two. And within this leg two, we have a leg one, pullback, leg two, pullback, leg three, into resistance, creates a lower high, higher time frame EMA. So I think that's a good sell. I think that's a good place to take profits. I didn't blindly sell that. I said that wrong. I think bar 24 is a good place to take profits. We have a leg one, we have a leg two, we have our leg three, and within our leg three, we have a fractal leg three, leg one, pullback, leg two, pullback, leg three. I bought 21 as it was moving up, and I scalped out on 24. Got about 4 or 5 points there. I bought around here. Then we have a nice bear channel. So what's the always in direction? Always in direction, we have multiple gaps. I'll draw them in at the end, but there's a gap here, there's a gap here, there's a gap here. No gap, no gap. Gap here. So always in direction is long, right? Yesterday's always in direction was short. We're still within that gap down. We never tested the high of bar one. Bulls definitely wanted to close the gap and just keep on rallying all day. They didn't get that. Looks like the higher time frame EMA is acting as resistance. We're in a bear regime. What happens when we get a opposite side channel against a trend? So if this is a bull trend, and we have a bear channel that puts us in range. So the always in direction is range bound. And that what is range? We buy the lower third, we sell the upper third. Yeah. So acknowledge we're in a range, whether you like it or not. I'm trying to say that as like a little message to myself because I always think the market's trending. So whether I like it or not, we're in a range bound price action. Somewhat of a triangle too. Not the best triangle you could say. Something like this. That's a sketchy drawing. Anyways, we have a 25 through 30 is a micro channel for the bears. 1, 2, 3, 4, 5, 6. 6-bar micro channel has to see some continuation. Minimum bears need is 1 tick below 29 to get to see their leg 2. Leg 2s don't have to be symmetrical. I didn't short any of this because I was hesitant to see what happens above the EMA. When EMA start to go parallel, that's kind of a sign for me to step aside because I get thrashed around. When EMAs go parallel, there's gonna be a lot of clashing. EMAs went parallel for a little bit, but bears got the sell. 31, 32, pull back. 33 is a low one. 32, pull back. 35, did I say 32? Excuse me. 34 is a pullback. 35 is a low 2, and I took that short. So I saw 36. That looked great for a continuation, and then I get trapped 37. But look at 37's close. The majority of bar 37's below the EMA. Bulls rallied to the high. Yeah, no doubt. And this could have kept going, but I was willing to see what the follow-through bar looked like. We are in a bear regime, and we did have selling yesterday. So I was willing to, if the rally just started to keep going, I would have hit out very quickly. But if you guys remember how this bar formed, look, it didn't really trade above. I thought I was muted for a second. I didn't do a sound check, man. I hope this is working. I always do a sound check. We never actually got 1 tick above. So what does that tell me? Bulls never got filled. Market order bulls are trapped. Stop order bulls are not filled. Stop orders are 1 tick above right here. The market has to sweep them in to go. Bar 37, 38. Bar 38 has to sweep them in. They never got swept. It didn't travel 1 tick above. So there are not a lot of bulls within this candle. Really bad follow through. And this gives the appearance of some sort of, my voice cracked, some sort of triangle bear flag, right? Here's that push. Here's that. And then look at 39. We break below the range. I think this is a market cycle reset. What makes it a reset? Well, we have a leg 1, pull back leg 2. Man. We have a leg 1, pull back leg 2, pull back leg 3, and range bound. So 50 to 16 can be the range lows. And it kind of is. I was more focused on this price action. The last 10 bars had a lot of overlap. And remember the gun analogy? If you shoot a bullet into a box and the range isn't too big, the momentum should spit it back out like this. This is still a tricky trade because we have a lot of bull gaps open. But if the market is range bound, right, always in price action is range bound right here, then this arrow is this leg here, this box is this price action here, and then this is this leg here. So I was reading it more bearish because we're in a bear regime. And bear regime because we're below the bear EMA. We have a lower high, we have a high, a lower high, double top, and then we have another double top. What's a double top? Bulls buy here, they get trapped, it sells off, they buy more lower, they make money on their second, and they get out at the first. Bears see this as resistance. Bulls see this as an opportunity to get out at break even on the high, because bulls bought. You see 32 is flat, but then look at the tail on 33. That means there's trapped bulls, right? So they buy here and they get out. I just said like 10 seconds ago how these bulls don't get filled, right? Because it didn't go up. Well, bar 32 bulls did get filled and they got trapped. So they bought more lower. Range bound price action, buy low, sell high. They buy more here and their price line becomes here. They make a scalp on their second contract and they get out break even on their first contract. So that gets enough selling pressure with this bear micro channel. Bears are looking for a second leg down. I was looking for a second leg down too. I got short on 35 because it was a low 2. What makes it a low 2? It comes at a worse price in a bear channel. See this low 1, Okay, that's a good price. Pull back, and then this isn't the best close, but the context was good, so I took it. Immediate follow through. Those trap bulls come up here, here. No follow through for 37. Sells off 39. That's a market recycle. Recycle. That's a market reset. Like one pullback, like two. Deep pullback. You could even say like one. Actually, you know what? You know what, guys? Look at these highs. None of these highs are breaking the previous candle, so this is leg one. Bar 45 finally breaks the high of bar 44, so that starts leg two. So leg one, pull back, leg two, pull back, leg three, and then we go sideways. Market cycle resets here. That's the market cycle. What is it? What's the market cycle? Breakout, channel, rechannel, and then we go range bound. So breakout, 31 being in the opposite bar starts the channel. So breakout, channel, we get three legs lower, leg one, pull back, leg two, pull back, leg three, pull back, leg four. Very sloppy drawing, excuse me. Bears' objective is always going to be 1-to-1, then they're going to go for 1.5, then they're going to go for 2-to-1. We're in a range, so it is better to scalp out. I mean, you could hold it for the swing if that's what you do, but just know range bound price action, you scalp out, you scalp in range bound, and when we have gaps open, we swing, we hold, we're willing to hold through pullbacks. These pullbacks were very deep because we're in a range bound price action. Look at all this bullish pressure. And right now, in this price action, the best the bulls can do is get range bound price action. And what happens in ranges? Vacuum tests. Vacuum tests are fast and they always look like breakouts. So here's a vacuum test. Here's a vacuum test on the 15-minute vacuum test. You see how all the bull bars look great, but no follow through? They're vacuum tests. They're testing some sort of resistance. Leg one, pull back. Leg two, 45 to 48. Rally, bad follow through. Again, look at how much is closing. If you bought 48 thinking this is good follow through, well, I'll ask you. This bar is I mean, technically there's more body, but look at the close. Bad close above the EMA. Not too much of the, if we take away the tail, so pretend the tail is not there. Pretend the tail is not there. We're not going to pretend. Okay, now the tail's not there. How much of bar 47 is closing above the body? It's not closing. It's really not. More than half of it's below, so it's a weak close. Yeah, it has follow through, but that's a range bar. 47, breakout with follow through. You see how much of the bear body is below? Look, 3/4 of the bear body is below. That's a better short than the better buy here. So compare the bull breakout to the bear breakout. What has more body below? The context is better. Remember yesterday with the sell-off? It's leg one, pull back, leg two, pull back, leg three. We go range bound. Really good day. Keep it focusing on always in. Focus on always in, leg count, and gaps. Always in is going to be my priority, and then it's leg count. We don't want to trade past leg three. Leg three is to do nothing, wait for the breakout. And gaps. If we have gaps, we're in a trending environment. So let's draw in the gaps, and then let's go over the 1-to-1s. What color we were doing? Purple, right? Do like 30%. I don't really like how it has a black outline. It looks kind of dingy to me. Yeah. Do you guys like purple? I like blue, but there's so much blue already. So here's a gap, right? Bull's got a gap there. I really hope you guys go draw in your own gaps on your charts because gaps show trap traders. I really want to do blue. I'm gonna do blue. Blue's my favorite color. Because it's a nice looking color. I wonder what makes a color someone's favorite color. Here's another, so this is a bear gap. So again, we have a bear channel against a bull channel. Gaps are gonna get closed. Bears targets are these gaps. We're leaving all the bears that get trapped. Limit order bears are getting trapped. That's what causes gaps. And then now bears get a bear micro channel. So we're in a range bound price action. And now bulls are going to go for gap closes. Look, no more gaps. No more gap. Okay, here's a gap. Here's a breakout gap. Breakout gap is crossing the EMA. And that kind of acts as resistance, but it gets tested a few times. Another gap. This gap isn't the strongest gap because it's a bear, bull. We want to see bear, bear. Nonetheless, bar 40 is a weak bull bar. I saw bar 40. I was short. I was short from bar 37. And when I saw 40, I told myself, okay, If bar 40 looks something like bar 45, it's a bull bar closing on its high. I'm getting out because it's a wedge bottom. 1, 2, 3, wedge bottom at support. However, there's more tail, so I read that as a pullback. So leg 1, pullback, leg 2. The reason I got out on bar 43 is because bar 42 completed the minimum leg 2, right? It has to go one tick below the prior leg. Bar 42 went one tick below 39. So that was a completion for me with bad follow through. Look, I missed a little bit of money, but it is what it is. That's the minimum. Bears got their minimum, so I had to get out in case we reversed. Final bear flags and training ranges can be reversal patterns, and that was really my after seeing through that snap, I really wasn't willing to sit through another snapback, and I caught it there. I took 3 trades today. Leg 1, pull back. Leg 2. Oh yeah, let's keep drawing in the gaps. Bull gap gets closed immediately. We get another gap here. Sell, zero. That's a zero height gap. This gap is smaller than it looks. I'm just trying to show a visualization. And here's another gap that gets closed. Bears get another gap here, and then we close on the EMA. We close below the, wait, let's see. Yeah, we closed below the EMA, so that's good for the Bears. Back to the Bulls. Bears wanted the bear close today. So see, follow through bear. Here's another weak gap, right? Bear, bear, bull. It was supposed to be bear, bear, bear. Now let's go over the 1-to-1s. So here's 1-to-1. This was my target today. Lately I've been leaning towards including tails, but I'm also scalping out. So it's interesting. That was my target. That's why I got it around here, because bars were shrinking, but 1-to-1 was met. We're in a trading range. And then so this was strong enough for its own second leg, and now we're going to read, is 8 through 12 strong enough? Yeah, I think 8 through 12 is strong enough. Okay, let's measure. Start here. Okay, look, Bulls failed to get their 1-to-1 right now, right here, see? That actually wasn't my target for this trade, but that is another target. I was going for 1-to-1 of this. I saw these 2 bars, so I went for a 1-to-1 like this. That's why I got it on 24. Double top. So I had 3 for 3. It's very rare I get 3 winning trades in a row, so I was pretty happy on that. Okay, so we see this bear micro channel. I did not take this trade, but you know, if you're privy to doing this type of stuff, lower high, you short the high of 24, you short below 24, you're gonna get your 1-to-1 on bar 44. That's not my kind of trade, but there is that trade there. I went for this trade. I saw this breakout. I put it on the low 2, and the target did get hit. I just wasn't going to be willing to sit through another pullback like bar 37. Stop never got hit either. I never also let my stops get hit, but I always go for 1 hour stop and 1.5 hour target, but my stop never gets hit. I will not let a 1 hour. I'm not taking a 1 hour hit. If I do, I'm probably on tilt and not thinking correctly. Bar 39, it's a strong close. That's a 3-bar microchannel on a 100-second chart. That can get its own 1-to-1. You wait for the pullback here. You short the high of 48. You should put a stop order below 48. 1.5 hours met, 51. Now, again, we're trading bar 50. Let me move this. We're trading bar 51, and then we see like, hey, this is strong enough too. So we measure again. But unfortunately, that's not met. That's interesting. So if you wait for the 2-legged pullback, leg 1, pullback, leg 2, wedge top, some sort of a wedge top there, you catch that 69 high. Maybe you don't. Maybe you wait for here. You barely make your 1-to-1 bar 77. I think it was a good day to trade. I hope you guys made money. If you learned something, share the show. If you're not learning anything, I apologize. Yeah, I'm focusing on always in, gaps, and leg count. I'm convinced that's all you need to know to be profitable. Not saying I'm profitable, but I was profitable today. I am trading live again. That's why I started posting shorts again. Hope you guys have a good one. I'll talk to you next week. It's Thanksgiving and Christmas, so yeah, it's going to be fun. Have a good one, guys. I'll talk to you later. Bye. Guys and gals.